Hello everyone and welcome back to another video. Please do consider subscribing if you have not already. I really do appreciate it and I'll start making more videos more often. I did have some life, changing stuff recently where I did start a new job, so I do hope to get back on track. Today we're going to go over Snowflake, and what Snowflake does is basically they warehouse different, companies' cloud servicing needs. So they are like a data warehouse almost for everyone that wants to be in the cloud. And they have like a very niche kind of moded kind of business that they run. But it's growing, but people are still just trying to see the vision come to life and trying to realize it and what that means in dollar terms and how much you're willing to buy, the stock for and value it. So as of right now, it is, well, the last close date was March 4th. 2022, and Snowflake closed at about $209. And the price target, so we can see it's a moderate buy with an average price target of $331. And the stock analysis is a 3. That's very bad. That's not very good. This is something that I usually go off of whenever I'm choosing my own stocks. Whatever this recommends, I usually go 7 and above if it's good. But if it's like below 7, I'm like, this is probably pretty mediocre because a lot of the analysts don't really have positive outlooks on it. And we can see why when we look at the net income statement. So here we can see that the operating revenue and that their total gross profit is about 349 million as of 2021. Full year ended on January 31st, 2021. And it's not really that great. If we go down to net income, they actually had a huge loss. They've actually lost money each of the last 3 years on a consolidated basis. Net income was negative, and you don't really want to see that. Like when I had first invested in Square back in 2015, it was something that like their net income was growing. So the negatives were getting smaller and smaller, not bigger and bigger. And that's just a poorly managed company at this point. If it's, such a good company, data warehousing, cloud, all those, high profile kind of, names for cloud, then you should really have like a growing business. And it's just not. Their losses are piling up. That's probably why it's given a 3, but we'll look into it more. So if we look at the balance sheet, we can actually see that their total cash is growing. That's good. And their total short-term investments are also growing. That's good. So, total current assets of about 4.3 billion. That's what we like to see. Clearly it's jumped almost 4 times higher as it was in 2020 from the year that ended in 2021. And then their total current liabilities is only about 789 million. And again, that one has gone up slowly. Yes, it has gone up, but it's gone up slowly. And the total current assets has been just way higher. So working capital is really good. Even up to like in 2020, they didn't really have that great of like working capital. I wouldn't say that 665 million in total current assets over 416 million in total current liabilities is very good. I would say that's too close for comfort. And if we actually look at their long-term debt, we should be able to see something in, okay, so this isn't listing out of the total liabilities how much is long-term debt, so we'll have to look at how much they're paying down on the next screen. So if we look at their cash flow statement, obviously it starts off with a negative net income. And if we look at acquisitions, they don't really acquire anything. Purchase of investments, they actually do buy. It looks like they probably converted a lot of it into short-term investments and or cash. So that's why it's so large right there, 4.8 billion. And then if we look at equity issuances, they issued more equity. That's not really a good sign either. That'll dilute the shareholders, so you don't really want to see that, especially when you're not buying back any shares. And it also doesn't look like, again, they really have any net debt listed. Maybe they don't have any. Someone check me out. Someone comment on that. I'm not really sure. But if we actually look at a portfolio of Snowflake when it IPO'd in October of 2020, we actually have data from January 2021 to February 2022, and we can see that $10,000 is now worth less than that. It's now worth 9,441. So over the last like 2 years, basically, you've not really like the last year, you've actually lost about 4.81%. And on an annualized basis, they actually had a really good 2021, regardless of the 7% inflation. And for 2022, it looks like they've basically wiped out that gain, and they've even lost some. So your 12,000 went down to 9,000. That's not really what you want to see. So again, I don't really like this stock, but I thought it was interesting just to kind of get into it. So I hope you guys like this video, and I'll see you guys soon.